I'm getting economically nervous. Twitter trolls are picking on me, and we have a big show and tell week for us and the US economy. I'm Peter Switzer, and I'm on my own, but I'm still mad about money. Okay, Paul Rickard's away on holidays. That's one good reason to be mad about money. He's got more than me at the moment, and that's why he's holidaying. But I am getting economically nervous for the first time in a while. Now, why would I do that? Yesterday's NAB business survey was worse than I would have expected. I wouldn't have been surprised to see it fall, but it fell. This is the business conditions reading. They look at business confidence as well in the survey, but the business conditions one has been a fantastic number that has really kept me pretty positive. Got as high as 13 or 14, which was like a record high for the survey, and it's now dropped down to like 2 or 3, from 10 down to 2 or 3. That's about an 83% drop in one survey, and that really has made me nervous. I'm not going pessimistic, I'm still cautiously optimistic, but remember, we didn't get a great September economic growth number. That came in about 0.3 when they were expecting like 0.8. The annual number for economic growth dropped from 3.4% down to 2.8, and I was hoping that the December quarter would be a bit of a rebound quarter for growth, but this December NAB business survey is making me a little bit nervous. So, and when you throw in the fact that consumers are also nervous, the Westpac monthly consumer number has dropped from above 100 to below 100. When it's below 100, it means that the pessimists are outnumbering the optimists. It is actually giving me good reason to think, well, maybe things aren't as good as I expected. Certainly job numbers still good, though we created about 20,000 jobs on the last account. That would have been for December, but a lot of them were part-time. I dismissed that on the basis that, well, most jobs that you put on in December are part-timers, people working in department stores or have Christmas or whatever. But there is good reason for me to be a little bit cautious, and that's why I'm warning you about this little change. Doesn't mean I'm going negative. Watch this space. Now, Twitter trolls. Like, what in the hell is going on with Twitter? I put out there the fact that most well-trained expert economists are saying that the house price drops in Sydney and Melbourne are going to be somewhere between 15 to 20%, somewhere even less than that. But there's a whole bunch of extreme doomsday merchants out there who really get stuck into me for actually pointing out that the majority of economists don't agree with them. They're in the 30% or even 40% economic Armageddon when it comes to house prices. And look, they could be right, but they also could be wrong. And as Billy Joel might say, they also could be crazy. And the way they're behaving on Twitter makes me think that they're crazy. One guy called me a narcissist. Another guy, I had to look up the definition of what narcissism actually is. And I looked at about 7 points. I didn't pass any of them. Well, maybe the fact I said that means I'm a little bit narcissistic, but I'm not a narcissist. I'm basically someone who's prepared to put the arguments out there, and if I can be convinced that house prices are going to drop by more than 20%, I will share it with you. And by the way, the fact that I quote well-trained, respected, well-paid economists who often work for financial institutions, these Twitter trolls call them cash for comment economists. Like, where do they get off being so insulting to these people just because they happen to work for a financial institution? Now, as economists, they don't have anything to do with some of the bad decisions that were made by these financial institutions. All they're asked to do is try and predict where the economy is going. And they get paid pretty well because historically they've been pretty good at picking where economies are going. So I just got to say, I'm not used to this kind of bully boy tactics when it comes to debating the economy. I must admit, when I taught at the University of New South Wales, a lot of economics lecturers, particularly the more left ones, were really, really up for having a go at you, for pondering whether you actually were a dope or not. These sort of things have been going on in the economics fraternity for a long time, but it's been a long time since I've been picked on like this, and I think Twitter really encourages people to behave really badly. I don't mind the debate, and I don't mind changing my point of view. There's a bell. I will switch. But as I say, I'm really surprised how badly behaved these people are when they're just trying to prove that they're more right than me. And finally, this is a big and important week for economics. In Australia, we get CPI, we get house prices at the end of the week, we also get lending data, and all those things are really important. CPI is important because we're hoping that we see some wage rises soon. Inflation will make that possible. If inflation's falling, it's not going to be good for wage rises, because remember, inflation comes when businesses put up prices, and they put up prices, up go profits, you expect, and that means they're able to pay higher wages. If prices aren't rising fast enough, you can't get too optimistic about wages. House prices, really important. Why the trolls are going after me is because house prices are their big concern. At the moment, Sydney's only down 10% this year, Melbourne's down about 8%. So Friday's numbers from CoreLogic will be really worth watching to see whether the rate of house price falls are starting to fall off. There was an interesting report in Domain today which suggests a lot of Australians think that house prices are going to skyrocket again. Just shows you how enamoured and how addicted we are to house price rises. I don't think it's going to happen. I think house prices will drop probably 15% or so, and then they'll go sideways for a while, and eventually they'll kick up again, as they historically do. Finally, America. America's got economic growth numbers this week, consumer confidence, durable goods, manufacturing numbers. Really important for us to work out how the US economy is doing. And at the end of the week, there's the biggie, the jobs report. Now, if the numbers are pretty well good, then the fears that the stock market had before December will be hosed down, and we could probably set ourselves up for some nice and gradual improvements in stock prices over the rest of 2019, provided Donald Trump gets the trade deal settled and sorted. If he doesn't, and these numbers are pretty ordinary this week, fears of recession could be rekindled. The fire around the recession fears would be rekindled, and that could be a problem for the stock market. And that's why I think it's going to be a really big week this week for the stock market and for the economy. I'm Peter Switzer, and as you can see, I'm not only mad about money, I'm mad about Twitter.